Good morning. My name is Bob Moberly. I'm with W.E.R.C.S, and W.E.R.C.S is a company we're going to talk about today as it relates to legacy capital. And legacy capital, in a nutshell, is that we seem to be losing a lot of our best Wyoming companies as the owners age out. And unfortunately, all too often, there are no in-state buyers. The company ends up selling out of state, and that kind of colonizes us in Wyoming. And what I mean by that is that we're here as colonies to produce profits to ship back to a home office or some larger company or aggregator. And we're seeing this more and more in Wyoming. And specifically, we'll talk about the insurance industry today, as I'm very familiar with that and what's going on in that industry. But maybe more importantly, as it relates to Wyoming in total, every time we lose ownership in a Wyoming company, it changes the dynamics of Wyoming in general. And that, I would say, is the most important thing. What I mean by that is, an example would be a Wyoming-owned company typically has a Wyoming accountant do their books, typically has a Wyoming lawyer, not untypical to have a Wyoming banker, have Wyoming insurance people. So when those companies sell to out-of-state owners, all of the service providers or material providers, whatever they may be, to that company no longer have that company to take care of. So it presents a huge hole to try and replace. And what happens in Wyoming is our best companies grow up, become strong, well capitalized. The owner's desire to sell due to age or the human life cycle is compelling at that point. So they sell out. And unfortunately, what we then have is typically a downsized volume of dollars that flow through the Wyoming economy. And I'll use the W.E.R.C structure to try to demonstrate that. W.E.R.C is a holding company, and all it does is provide for shared ownership in the subsidiary companies or investment companies. Excuse me. So Wyoming Financial Properties is one of the companies that is 100% owned by W.E.R.C. The other one that's 100% owned is Wyoming Financial Insurance. And Wyoming Financial Insurance I'll focus on for purposes of this part of the discussion. And simply put, it's one product that everybody in Wyoming, whether you're a business person or a person that has a car or a home, has to have. You have to have insurance. And there are a lot of people that have been buying insurance agencies in Wyoming for an extended period of time. And we're down now in Wyoming to 5 different large agencies that are doing business in Wyoming. We have 2 large private equity players that have been buying agencies, and we have 3 Wyoming owned agencies left. And I'm going to try to demonstrate the power of who you choose to do business with, because this is all about trying to keep more money in Wyoming for an extended period of time. So the case that I would use is Wyoming Financial Insurance. It provides property and casualty insurance as well as benefits like health insurance and life insurance and those types of products. So if this is 100% Wyoming owned, which it is by W.E.R.C.S, then theoretically 100% of the free cash flow from this insurance agency channels up to W.E.R.C. So we have a choice we can make. Of the 5 agencies that are left in Wyoming, 2 of them are large private equity funds. And what they're doing is they're buying agencies all over the country. So their model is buy agencies, take the cash flow, roll it up, and continue to buy agencies everywhere they can. There are currently 32 different private equity buyers in search of insurance agencies in the United States. So it's really coming at us very fast. And what that means is they're aggregating insurance agencies. So every time they buy an insurance agency in Wyoming, those service providers, the accounting people, the management people, anybody that is directly not tied to production or service is eliminated. All those functions are taken back to the home office. So basically, If you have an agency owned out of state, the money that they get for premiums starts there and then immediately goes out of state. So what we're talking about is the difference with who you choose to do business with. If you can have the same product from the same company at the same price, does it make more sense to ponder for a minute who you choose to buy that product from? Because there's a huge difference in the impact on Wyoming. If it's an out-of-state agency, all the premiums and all the commissions, short of a couple of jobs that are retained in Wyoming, go out of state. They don't spend a lot in advertising. They don't spend much for charitable contributions. We lose a lot of the social fabric of those companies once they're sold out of state. So in this particular example, many agencies over time in Wyoming have sold out to these two large private equity buyers. And people think about them like the agency that they started out as 100 years ago. In Cheyenne, it was the Murray Agency, and everybody still thinks they're doing business with the Murray Agency, and it has been sold 4 times since the Murrays owned it. And in Casper, as an example, the Freeburg Agency also used to be a very prominent agency, Wyoming owned, and it has gone through 3 or 4 different owners also. So if you're still doing business with those two out-of-state owned insurance agencies, all the money's channeled out of the state. And I would use the example that when they bought those agencies, they were about 35 people each, about 70 people total. Today, in total, they employ about 10 people in Wyoming. And there aren't any accountants, and there aren't any people providing those services to them. So not only is the aggregation process designed to take profits out and return them to some other place in the United States, but it's designed to efficiently remove jobs and package them up and export them to call centers or some other type of operation. So we lose both the profits and the jobs ultimately in that type of scenario. So instead, what Wyoming Financial is going to do is, instead of go with the normal life cycle, I'm 66, if we sold it, we would have 80 jobs turned into probably 35 or 40 jobs within a year. And all of the management people, all of the accounting people, anybody that wasn't directly tied to production or service would be eliminated. And at that point in time, because of the profile of the agencies left in Wyoming, the vast majority of the premiums in Wyoming would be flowing to out-of-state owners. We are the largest in-state owned agency, and I believe that we're probably the largest agency doing business in Wyoming. So if we can keep that, there are 2 more agencies in Wyoming that are going to age out. It's a fact. So one of them probably will go another 5 or 10 years, and no heir apparents in the family. They will be forced to sell. The question is, do they want to sell to in-state owners or buyers or out-of-state buyers? And certainly that's when it gets to that point, some of that conversation is based around value. Or the in-state buyer is willing to pay as much as the out-of-state buyers. So the other one will probably come into play in the next couple of years. We'll have to wait and see. But it's very likely that the 2 other in-state agencies that are of size will change ownership in the next 5 or 10 years. And if they go to out-of-state owners, it's game over in Wyoming in terms of insurance. The one product that everybody needs and utilizes would all be flowing to out-of-state agencies who have no real goal in mind other than to treat Wyoming as a colony designed to return profits back to some other state.